You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a brand new week and we have the US markets at record close, given that the US Federal Reserve Chairman has indicated that the monetary easing could begin as soon as September itself. Now, at the Jackson Hole Symposium, the Fed chair did indicate that the rate cut would be necessary to support the employment and growth. So this could mark the first rate cut by the US Federal Reserve since December itself. So now all eyes are on whether the Fed chair would opt for a 25 basis points rate cut in the September meeting, which is likely to be held in 16 to 17 September. And 50 basis points by the end of this year is something that, all the traders have been watching out for. Now, this definitely means a positive for our own markets. The GIFT Nifty trends is definitely pointing out to a positive start for the Lal Street. And we'll watch out if this would give further impetus for RBI to follow the similar rate cut path in the next policy meeting. Now, by the end of this week, we'll also be having the GDP numbers, wherein economists have been projecting a sequential ease in the first quarter compared to the March quarter. So how this rate cut pans out at a time when growth has taken a hit is something we'll understand from our experts in the show as well. But yes, apart from the strong global cues, we have US markets on a strong footing, and then we had the Asia Pacific markets also rising this morning itself. So we'll talk about certain stocks in focus as well. A Nifty rejig which will be taking place this week, and then we have some order wins for railway counters, Titagar and Railtel. So all of these counters we'll be discussing throughout the trade as well. We'll watch out for metal stocks also in today's trading session, given that the rate easing cuts by the US Federal Reserve has been announced. But yes, all of this and your stock related queries also we'll be addressing. But before that, let's take a quick check of the top headlines, Sisa. US Federal Reserve Chair Jerome Powell signals that the central bank can begin easing of monetary policy in next month, cites sweeping changes in trade, tax and immigration policies. Stocks on Wall Street soar on Friday's trading session on the back of Fed's chair speech. Dow Jones posts a record close, surges 800 points, while Nasdaq Composite adds nearly 400 points. Asia Pacific markets rises this morning, tracking Friday's move on potential rate cut. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Crude oil prices hold on to the gains from last week as Ukraine peace talks stall and Fed chair signals easing of monetary policy. Gold prices rebound on the back of chairman's speech. And CNBC TV 18 Newsbreak confirms that the GST Council is set to meet on 3rd and 4th September to take centre's proposal of rate rationalization. So yes, the last week we did see that a lot of GST talks and had taken place on the Lal Street as well, and as a result we could see a lot of stocks also reacting on the back of that itself. But yes, in the last trading session we did see that the Nifty broke its 6-week winning streak, but still below that 24,900 mark, and ended the week with about 1% gains. Auto heavyweights, they were some of the top Nifty gainers in the last trading session, and Grasim Asian Paints were the top Nifty laggards. On the other hand, if you look at the broader end of the markets, they witnessed profit booking in the last week, and of course the Fed chair signals on the rate cut is imminent, which is in the next meeting, could bring some cheer to the markets in today's trading session as well. But apart from that, we have some other cues that we will be watching out for. That is your double tariffs, which will be kicking in 2 days. It's a holiday truncated week, so it coincides with your August 27 and of course the holiday week, and of course the double tariffs that the US president has imposed on India for the Russian oil purchases. But yes, the PM's visit on China, that also will be a key tracker, and of course the GDP numbers, like I was mentioning, by the end of this week we'll be watching out for how the numbers spell out for the markets. But yes, coming to the fund flows data, FIs, they stood out as net sellers in the cash markets. They sold stocks which was worth about 1,600 crore rupees, and DIIs also were the sellers, sold stocks which was worth about 269 crore rupees in the cash markets. Coming to the option cues data, Nifty put call ratio slipping to about 0.73 levels from 1 levels, and the new stock that has been added into the F&O band, that is your Titagar Rail, and the stock that continue to be a part of it, that includes your RBL Bank and PG Electroplast. But yes, before we move on to our first guest of the show, if you want your financial freedom, that is your goal, Super Pro is your superpower. So you can get all your live trading and investment ideas from the SEBI registered experts, pre-identified chart patterns and AI-powered stock-related alerts on WhatsApp all in one, and right now with a special financial freedom offer. So just get the annual plan for about 2500 rupees. It's down from 7500 rupees, and download the Money Control app and subscribe today itself. So yes, with that, let's quickly get on board with our technical expert of the show. Joining me is Rajesh Palviya of Axis Securities. Rajesh, good morning. It's a truncated week, but now we have tariffs coming into effect in just 2 days. How do you see the Nifty to move this week?
Good morning, Lovisha. So, looking at the correction in the especially in the last trading session, Nifty now trading below to its important moving averages. And if we analyze the derivative data also, as we are into the expiry week for this series, so major call writing activity has been witnessed at 25,000 strike as well as 24,900 strikes. So, if Nifty needs to, show some more pullback and in line with the global cues, I think 25,000 is the key hurdle for the market. Until the Nifty not crosses this level, maybe we could remain in the range only 24,800 to 25,000 would be the range for Nifty for next couple of days. Once Nifty able to take out 25,000 level, then yes, there could be some short covering action ahead of this monthly expiry, and then possible really can extend to 25,100 to 25,200. But looking at the bank nifty, here we have witnessed more weakness, and the bank nifty has broken its important support area. Even it has slipped below to 100-day moving average. So here the setup is slightly on the weaker side, and as we are trading below to 55,500, I think Bank Nifty may exhibit furthermore weakness in the coming days until the Bank Nifty not able to surpass above 55,500 zone. On the downside, 44,800 is the key support area for Bank Nifty at this juncture. So I think we believe that some more range bound activity is likely to be there in the Nifty until the Nifty not crosses about 25,000 level, and for Bank
Hmm.
Nifty 55,500 is the key hurdle for any kind of pullback if it comes ahead of this expiry.
That's right. Just less than 10 seconds to go, but we'll be watching out whether or not Nifty can mount above that 25,000 mark, because as Rajesh was saying, some volatile movements could be seen until Nifty reclaims that level itself. But yes, the pre-open rates have been pointing out to a good start. And if you look at the first rates, which is coming on your screen, above that 900 odd levels, 0.3% uptick coming in from the Nifty 50. Of course, we did see that a global setup was quite supportive in today's market. Asian markets were up. US markets also posted record close. Some, of course, the relief coming in on the back of the rate cut hopes that has been projected by the US Federal Reserve itself. But yes, let's take a look at how Sensex has been doing. 200 points uptick coming in for the Sensex, 0.2% gains, 0.3% gains coming in for the Sensex too. If you look at majority of the sectoral indices have been doing well in the early rates, apart from the Nifty Media Index, which is seeing a downtick of about 0.3% cut. But yes, Nifty IT Index doing well, 1% gain coming in there too. Nifty Metals also doing well with about of 0.5% gains. And if you look at the broader end of the markets, they also remain quite supportive of this upbeat sentiment. Both the mid cap and small cap indices have been doing well in the early trading session itself. Now let's take a look at some of the gainers and losers on the top Nifty 50. If you look at majority of the tech stocks have been doing well on the back of this rate cut hopes that the US Fed chief has been talking about. Tech Mahindra, TCS doing well, 1% gains coming in there too. Trent, Hindalco, Bajaj Finance are some of the other gainers on the Nifty 50 itself. However, on the losing end, we can see ICICI Bank with a cut of about 0.5%, Bajaj Finserv, SBI Life, all of them on the top Nifty 50 losers list itself. But yes, we can be watching out for more stock specific action, which will continue in today's trading session on the back of its news flow itself. But yes, let's also talk about the IT stocks, because they have been doing well, quite well in today's trading session. Rajesh, what is your view on the Nifty IT now that we have US Fed talking about some rate cut hopes beginning itself from September onwards?
Yeah, so there is a gap up opening for Nifty IT, and now
Hmm.
Nifty IT is trading around 36,000 level. Looking at this gap up, I think if it's able to sustain about 35,800, 850 zone, so I think some more pullback action we could see. Even if we analyze the most of the IT stocks are in oversold trajectory, and some buying action was already there in most of the IT stocks from the lower end of this corrective move. Uh, Especially in mid cap IT, there was some buying action was already witnessed in the last couple of trading session. So I think stock like Coforge, LTI Mindtree, this stock emphasis, all these stocks can be looked at for near-term trading perspective. Again, from the large cap IT space, TCS and Wipro both are looking attractive, and I think here also we could see some more pullback in these coming days. So I think one can hold on the position as Nifty IT is holding about 36,000. So till these levels are intact, I think one can hold the position. I think we may see furthermore pullback action in mid cap as well as in the large cap IT. So our choice would be Coforge, then LTI Mindtree, Emphasis, TCS and Wipro. These all stocks we are focusing from the IT pack.
Okay, all right. Let's also talk about metal stocks. 0.5% gains coming in there itself. Rajesh, what is your outlook for metal counters? Because so far this month itself, if you look at Nifty Metal Index, it has been quite flattish, flat to mildly positive.
So I think from the metal space, Hindalco is looking more attractive. The way stock is trading near to its swing high of almost, if you analyze July swing high. So looking at the structure, any breakout above 720 can take this stock further higher, and then possible target towards 755, 760 we may see in the Hindalco. So Hindalco is looking attractive. Again, JSW still was showing sign of some correction, but again, it's trading near to its important support area of 20-day moving average, which is placed at around 1040 level. So if stocks manages to hold above 1040, then some pullback we could see in JSW Steel also. Jindal Steel and Power is also trading near to its 20-day moving average support area, which is placed at around 980 zone. So I think Hindalco, JSW Steel, Jindal Steel and Power, these three stocks are looking promising from the near-term chart structure, and I think these three stocks can show some outperformance from this metal pack.
Okay, all right. Let's also take some stocks in focus. Interglobe Aviation and Max Healthcare can be entering Nifty 50 in its September review itself, and it could be a part of the biannual index rejig. On the other hand, if you look at IndusInd Bank and Hero MotoCorp, they are expected to be excluded from the index in its September review itself. And Nuvama expects that Indigo, both of these counters, Indigo as well as Max Healthcare, could see some passive inflows coming ahead as well. Both the counters have been doing well in today's trading session. If you look at Indigo, that has turned out to be a good performer this year itself, but Max Healthcare still with about modest single digit gains. But yes, on the charts, Rajesh, how do both of these counters look like?
So Indigo is in clear uptrend. Stock is making series of higher top, higher bottom formation, almost trading near to its all-time high trajectory. And the way the stock charts are placed on the long term as well as on the short term structure, I think both structures are looking promising for the counter. And I think once the stock crosses about 6180 zone, the upward trajectory will open, and then possible momentum towards 6250, 6300 we could see in Indigo in the coming days. So one can buy and accumulate this counter in minor decline. On the downside, 6000 is the immediate support area. For Max Healthcare, again, healthcare space is doing good, and again, Max Healthcare after a brief correction, now stock is showing sign of recovery. Here also series of higher top, higher bottom formation. Stock is clearly in uptrend on the long term as well as on the medium term structure. So we do hold our bullish view for Max Health also. On the downside, 1200, 1210 are the important support area. So till the stock is holding about 1210, I think trend is likely to be exhibit on the bullish side. Once the stock crosses about 1280 zone, I think here also we could see another round of rally, and maybe we could see new all-time high trajectory also for the counter, and possible upward momentum towards 1350, 1380 we may see on the short-term perspective. So buy and accumulate would be the strategy for Max Healthcare also.
Buy and accumulate for both of these counters. Then let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Debu K. He's been asking the view on Lupin. Lupin, of course, so far this year the stock has been an underperformer, seeing a decline of about 16%. But if you look at from the 1 month perspective, the stock has tried to pick up some momentum. Rajesh, what can we expect? How does the near-term outlook looks like for Lupin?
So after a significant corrective move, stock is trying to recover from in the lower band of this correction. In this process, now stock is managed to cross 20-day as well as 50-day moving average. Looking at the near-term structure, 1930 is the key support area for stock. If it's continues to trade above 1930, so I think some more recovery we could witness in this counter, and then possible up move towards 2000 would be the immediate target on the higher side. So 1930 should be your stop loss if you have already bought at lower level.
Okay, all right. He's also been asking the view on PNB Housing Finance on how the counter looks like. Of course, the stock did see about 20 to 20 plus percent downside after the CEO's resignation. But today the stock is doing well with about 0.2% gains. Raj, what can we expect? How does the near term look like for the counter?
So structure has turned on the bearish side, and we have seen a significant corrective move where stock has corrected all the way from 1150 zone to almost around 750 zone. Even in the recovery, still stock is struggling to cross its near-term resistance zone, which is placed at around 850 zone. So until the stock not crosses and sustain above 850, trend is likely to be exhibit on the weaker as well as on the bearish side. So my advice would be don't average out even if you have bought at lower level. Let the stock to settle down from this supply pressure. Let the stock to cross 850 zone. Then one should review it, and then I would advise to average out at this juncture. I think on the downside 780 is the crucial support area. If it's break below 780, I think again we could see another leg of supply pressure, and then possible down move can open towards 740, even 720 zone also.
780 is the support area that we need to watch out for PNB Housing Finance. That's the key takeaway. Let's take another viewer query then. Nitin Shaji has been asking the view on Suzlon. Of course, Suzlon as a stock from June itself, the stock has been on a corrective mode. June was a selling pressure, then July also the stock saw a significant selling pressure. August itself, the stock is down quite significantly. But yes, Sir Rajesh, what can we expect? Can we expect further sell off from the counter?
So stock is moving in down sloping channel on formation on the weekly chart, and looking at the formation, it clearly shows there is sustained supply pressure is taking place in this counter. 65 is the key hurdle for the stock. 65, 66 needs to cross to show a sign of a reversal for this down move. So until the stock not crosses these 65, 66 level, a trend is likely to be exhibit on the weaker side. On the downside, 55 is the key and critical support area. If it's break below 55, then maybe stock may slide further towards 50 level also.
Okay, all right. 55 levels also. Let's take one stock in focus. Yes Bank. Of course, the RBI has given nod to the Japanese SMBC to acquire about 25% stake in the counter. The approval is valid for about 1 year despite the stake sale hike. But yes, how does the counter look like on the charts? Because today the stock has been doing well, 3% uptick coming in for Yes Bank.
So if I analyze on the long-term chart, stock is not going anywhere on the higher side. 2021 is the key hurdle for the stock. On the downside, 18 rupees is the support area. So it's trading in range of 18 rupees to 20 rupees only. If stock needs to, show some, more uptick, it has to cross 20.50 level with the volume action and sustain above those level can trigger some buying action, and then possible up move towards 23, 24 we could see. But looking at the overall structure, I think stock may take time to, give breakout as a lot of supply pressure is still there at 20 to 21 rupees band. So that supply pressure needs to be absorbed by the stock. Then only we could see some, short covering action in this counter. I think till 2021 levels are not taken out by the stock, maybe we could see further more consolidation. So if you have patience and if you can hold it stock for a little longer period, then only invest in this counter. Otherwise, you would get other stocks where you can make good return in the short term perspective because this stock is still showing sign of more consolidation in the coming week as well as in the coming month.
More consolidation likely for Yes Bank. Of course, it's a high beta stock, so one needs to trade quite carefully on the counter itself. But yes, let's take another viewer query then. Nana Prakasham is asking the view on Narayana Hrudula in the short term. How does the counter look like? Because after the June peak, the stock has been down about 20% itself, Rajesh.
Yeah, stock was in corrective mode, and looking at the weekly chart, stock has taken the support from its important support area of 1720 kind of zone. So on the downside, 1720 is the important level for the stock. Though there is some recovery from the lower level, but still stock is struggling to cross its 20-day moving average. And since last 3-4 trading session, stock is negotiating with its 20-day moving average supply zone. So 1860 is the key hurdle for the stock for near-term perspective. If stocks manages to cross over 1860, then we could see some more upward momentum towards 1950 2000 zone. But I think looking at the structure, I think some more consolidation is likely to be there in this counter. On the downside, 1760 is the key support area and 1860 is the resistance area. So either side breakout or breakdown will decide the major direction for the counter. But if we analyze on the longer term time frame, stock is in bullish trajectory. So those who are looking for little, longer horizon or investment perspective, they can buy and accumulate. But for trader, 1860 is the key level. Let the stock to cross 1860 level, then take your position for trading point of view.
Okay, all right. Let's take another stock in focus. That is your Mazagon dock. The stock has been doing well after the Defense Ministry said that they are expected to buy 6 submarines under the Project 75. But yes, sir, the stock after the building momentum till May onwards, the stock has been in a consolidation mode. What does the near term suggest, Rajesh? Can we expect a further fall, or what can we expect on the next levels to be?
So, since last 2-3 months, stock is in corrective mode, but the intensity of supply pressure is now, absorbed by the market participant. And I think looking at the near-term structure, some supply pressure is absorbed at this corrective move. 2710 is the key level on the downside. Though stock has shown uptick in today's session, so 2700 is the key level for near-term perspective. If it continues to trade about 2700 level, I think some recovery we could see in this counter, and in the recovery 2800 to 2850 would be the higher level for the counter. So those who have bought at lower level can follow the stop loss of 2700 to hold the position.
Okay, all right, 2700 to hold the position for Mazagon Dock. Let's take another viewer query. Nanda Reddy is asking the view on BSE, and he's asking whether he can enter the stock right now. The stock is once again down with about 1% decline coming in today's trading session. And of course, the stock has been on a downward trajectory. We did see that the SEBI's update did come in for the ways of increasing tenure and maturity of equity derivatives contract. And that's why we can see majority of the capital market stocks have taken a hit. Today also BSE is seeing a decline of 1% itself. Rajesh, what can we expect? Can he enter now or what should he do?
So still, the SEBI has already indicated that they may change or tweak some derivative expiry dates, or maybe they can change the contract expiries for weekly options. So I think that move will directly impact to the profitability of the company. So I think some investors have booked their profits ahead of this, changes if it's come. So I think maybe we could see some more consolidation, though stock has already corrected and it's now trading near to the lower band of this correction. 2200, 2250 is the immediate support area for the counter in this decline. Any breakdown below 2200 can attract more supply pressure, and then we could see some more down move to 20,000, 2050 level. On the higher side, 2420, 2450 is the key hurdle. So if stock needs to recover and again move back to its upward trajectory, 2450 needs to be taken out by the stock on the higher side. But looking at the structure, we believe some more consolidation in range of 2200 to 2400 would be there in this counter. So those who are looking for little longer horizon, they can buy and accumulate in the decline, but don't buy in one go, buy in a staggered manner, as still supply pressure is still there in the counter.
Okay, buy in a staggered manner because of supply pressure. That's the key takeaway. Let's take another viewer query then. Dipankar is asking the view on Utkarsh Small Finance Bank. Of course, the stock, you can see the stock is down in today's trading session also, and it's below the IPO price of 25 rupees itself. But yes, from a near term perspective, can we expect further pressure to build on the counter, Rajesh? What do you believe?
You're talking about Utkarsh, okay.
Yes, Utkarsh Small Finance Bank.
Okay, stock is in downtrend only, and I would say avoid at this juncture. There is no sign of recovery, though there is some recovery in the near-term chart, but not that much great in terms of volume, in terms of chart structure. So I think 24 is the key hurdle for the stock. Until the stock not crosses those level, uh, we could see, stock to remain in the range only. 2250, 2400 are the levels where supply is likely to be there. On the downside, 20 is the support area for the counter. So maybe stock may remain in this range only. So I think avoid at this juncture. You can get some other stock ideas where you can generate good profits, as this stock is still in the downtrend only.
Hmm. Okay, all right. Let's also take another viewer query. We have Rupak Mehta who's asking the view on ABB India because he's been holding it and it's down about 11% from its holding price. He's asking what the next moves could be and what's the next strategy could be for the counter itself. Any thoughts on the same, Rajesh?
Yeah, ABB is in corrective mode, and if we analyze the structure on the weekly as well as on the monthly chart, stock has shown a sign of weakness for both the time frame. But on the monthly chart, stock is now trading near to its important and critical support area, which is at around 49.50. So till stock is able to hold above 49.50, there is a chances that we may see some recovery, as stock is already in oversold trajectory for near term to short term. So maybe we could see some recovery towards 50 to 100 from these levels. So 14950 needs to be keep as a stop loss if you have already in the long side of trade.
Okay, all right. All right. Just one last question before we let you go, Rajesh. What could be your picks for this hour?
So I think some recoveries taking place in mid-cap IT stocks. So I think OFSS can be looked at to buy. I think here we could see some upward momentum. 9,100 would be the next target for the counter. On the downside, 8,700 needs to be keep as a stop loss. Another stock that we like is from the chemical basket, that is UPL, United Phosphorus. This stock is also showing sign of recovery, and we believe that here we could see some traction towards 755 760 zone. On the downside, 710 needs to be keep as a stop loss. Another stock is from the pharma space, that is Dr. Reddy. Now stock managed to cross its 50-day moving average in this recovery. The way recovery took place in this counter since last couple of days, I think Dr. Reddy may extend its gain. 1350 would be the next target. On the downside, 1240 should be your stop loss to buy and accumulate Dr. Reddy also.
Okay, all right. Those are the stocks that we need to watch out for as well. But with that, we have to let you go, Rajesh. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets. They have been holding up well in the green. Sensex up about 290 points and Nifty also above that 24,950 mark itself. IT stocks have been the flavor of the Lal Street today, given that the US Federal Reserve has pointed out to rate cuts as soon as September itself. If you look at the other sectoral indices, metal index has also been holding well with about a percent gains itself. India Wix has, however, shot up to about 2% as of now. If you look at the broader end of the markets, mid cap and small caps, they continue to do well. But yes, if financial freedom is your goal, Super Pro is your superpower. You can get all the live trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp, all in one combined. And right now with our special financial freedom offer, now get the annual plan for just 2,500, which is now down from 7,500 rupees. Download the Money Control app and subscribe today itself. So yes, like I was talking about coming back to the markets, let's move on to our next guest of the show. We have market expert Sunil Subramaniam joining us. Sunil sir, good morning. Sunil sir, it's a truncated week, but the 50% tariffs can take effect in 2 days. How do you feel about the markets at the current juncture?
I think the 50% tariff is a bad news that the market is already discounted. And I don't think with the US trade delegation postponing their visit back and the Trump Putin talks not leading to any great traction. If you remember, the second 25% was more of a political tariff. And we used, and even Mr. Vance, the vice president, has confirmed that was one of the strategies to bring Russia to the negotiating table. So it's not India specific. So there was a hope that if that leads to a resolution of the Russia-Ukraine crisis, the 25 might go away. But as things stand, I think with Ukraine bombing a refinery in Russia and Russia counterattacking, doesn't look like the solution is quite near. So this 50% is likely to remain and it's going to come into effect. But like I said, the market is already discounted. A little bit of positivity around it might go away. That's not there now. So let's take that the market has discounted that. But there's a whole host of positive news which the market can trade on. And that started with the Prime Minister's Independence Day speech, the S&P upgrade, and yesterday, of course, the Jackson Hole rate cut hope which the market has derived from. So the dollar index weakening and the rate cut, it's positive for equities, positive for emerging market flows, and hopefully India will get a share of that in the coming days.
Okay. So, sir, what about, given that the Fed has indicated for a 25, maybe a rate cut for September itself, what does it mean for our RBI to going on with its rate cut path?
So I think it definitely encourages RBI to do another rate cut because the interest rate differential will widen if RBI doesn't also cut rates. So that's number one. Number two, this 50% tariff wasn't there when RBI did their last policy. So I think the ongoing events means that there could be some impact on our growth. So there's a second factor for RBI to consider. But counter to this is the fact that the government has now done a fiscal boost through a GST reduction program. So RBI will probably wait to see whether that translates into good growth during the festival season. So while there is a supportive condition and inflation continues to be moderating very well. So the conditions are fairly evenly balanced between doing another rate cut and not. And I think that by the time the next policy comes, we will probably have a better sense of the festival season, and that would play a larger role in terms of the Reserve Bank's action. But yes, the Fed rate cut may gets one more point in favor of a RBI rate cut in the near future, but other data has to come and support this. But that being said, the Fed rate cut itself is a positive for emerging market equities and positive for India. And second is that it's positive for the BFSI sector in the US, which is probably the largest buyer of IT products. I think about 55 to 60% of Indian IT companies' exposure in the US is to the BFSI sector. So something that's positive for the BFSI sector would mean that is positive for IT. And IT has been a big underperformer. YTD or 1 year return, you see, IT has been probably the most underperforming sector in the Indian market. So from a relative valuation perspective, one of the reasons FIs are not rushing to come back to India is because we are still expensive compared to our long-term average, compared to other emerging market stocks. So from that point of view, I think the FIS return will come into an area where they feel there is some value and IT would be top of the ladder. So I expect that return of FII would correlate with the movement up in IT, though on the ground level, their earnings season was what it is and there's nothing really changed. But the outlook for IT with a positive outlook on the BFSI space in the US, I think could be positive. So there is relative value, I would say. It's not that it's a cheap sector, but there's relative value in IT with an FII return, around the horizon.
Okay. So, Sunil sir, does this mean that IT could be the late bloomer of this year itself?
I think so. I think I'm one of those who, like 4 or 5 months ago, was negative on IT, then changed my view. I've turned positive, more saying that this is the best contra pick. And like I said, I would correlate the fall in IT over the last year to FIS selling. And so, with all the positive news coming around India, both from the S&P, again to reiterate the government's boost in, from a consumption perspective and the support of RBI. So I think there's a lot of money gone to the China and to the South Korea markets in the FII pool. So I think those markets have now run up very well. And China, despite the economic news not being great, the markets are roaring there. So at some point of time, there will be a reset. I think Chinese valuations vis-a-vis their growth will not look so attractive, and there'll be some shift towards India. And second is, I think passive funds, right? We have about 17% of the emerging market index. So passive funds, when they get money for emerging market because of the Jackson Hole indications, means that India will get 17% of passive flows in. So which means that compared to the previous when there wasn't any flows, to get 17% of whatever incremental flows come, and in the passive 10% is the IT index, in the emerging market, in the MSCI India index. So that amount of buying support which was lacking will mean that definitely IT will get a leg up purely based on these flows. So I would say yes, IT, you put it right, it's a late bloomer in this year.
Okay, okay. But Sunil sir, what does it mean? What do these tariffs mean for the export-oriented sectors? We of course seen some caution coming in for the gems and jewelry, and then we had textile stocks which came under radar. But last week we did see government lifting that import duty from cotton. So can this just act as a temporary reprieve, or how do you see this to pan out?
Definitely, the government, even the GST cuts, I would say, to the extent that up the value chain, there's a reduction in taxes and costs, would make them a little more competitive. The RBI not doing a rate cut means they could depreciate the rupee a bit, which is again a protection against tariff. So India, it's not as if we don't have weapons against this 50% tariff. So the government clearly has gone on the front foot with the GST. So I think that we will do necessary support to the export-oriented sector. So to some extent, you can view that this kind of a correction on those export-oriented sectors is a bit overdone, but it is still a risky play because we don't know. The US keeps threatening. Mr. Navarro, who's the supporter of Mr. Trump and who's his advisor, is going strong heavily against India. And who knows, this 50% should remain at 50, or if because Russia is not yet responding to Mr. Trump's overtures, Trump could increase the pressure and he could add additional tariffs on India too. So it's a little bit of a fluctuating situation. So I would say that at this point, stay cautious around that. Though I think a lot of this correction is overdone in my opinion, but there could be some more correction coming through. So stay focused on the domestic side at this point in time, and let's wait for further clarity around the whole tariff scenario, in the coming weeks.
Okay, okay, okay. So do you believe that, this inflationary impact that could come as a result of the tariffs itself could be offsetted by the GST rationalization that the government has been planning?
No, I don't think there will be an inflationary effect. Is going to be on the US consumer, right? The tariffs are going to apply to the US consumer. So I don't think there's any India inflationary impact that this is going to counter, right? Like I said, for the government, they have to make our products competitive with the competing nations. They are having only a 20-25% tariff. We are having a 50%. So that difference needs to be made up. And it's a three-pronged strategy. GST is one. Currency depreciation will be second, and any export-related, financing-related incentives, like giving them cheaper loans. So government has some tools which they will apply, but inflation is not a concern because it's the US inflation. So I don't think that India is too much worried about the US inflation. We are more worried about making our exports competitive.
Okay, okay. And now that GST rationalization is just the talk of the town, how do you feel about the consumption making a comeback? Do you believe that there's going to be a pivot from the capex to the consumption-related stocks?
Well, I think last week saw that happen. We think we brought in between 3 to 5%. All the consumption stocks and the indices had a strong rally. Now, the key is that there is going to be some disappointment in the near future because obviously the GST Council has yet to meet. They're meeting in the month of September. The effective date for the GST reduction has to come through. So all the stocks of the dealers have piled up at the various companies have piled up at the dealer outputs, right? Now, will a customer postpone his purchase saying, let the GST come through, let the effective date come through, I'll get a cheaper cost a month from now. So to that extent, we might see a softness in their sales, that the stocks piling up. There'll be inventory costs, inventory financing costs for these companies. So, and they might do some discounting to push the sale. So it's a mixed bag today. So I think the last week's run has caught a lot of the rally. There could be a little bit of a leg there, but I would say that let's wait for the GST Council to meet, let all the states agree to it, and let them agree on an implementation date. Once that clarity comes, that will then mean that we will can look further at again consumption. So at this point in time, the rally has happened. Let's just wait. But I would argue that the capital goods infrastructure space is something you should look at, because GST is going to lead to a postponement of the consumption, right? Because of the GST. So by Diwali, definitely this GST will be in place. So sales should go through. So from that point of view, I look at it as the second derivative, that what happens if the consumption goes up is that capacity utilization goes up, and private sector capex, which already there's green shoots coming. I think L&T's chief had given interviews where he said private sector capex is coming back, their order book is growing, but it'll get a further leg up when capacity utilization moves up. So I believe that the smarter thing to do is to buy these capital good related plays before this news becomes very much public. And in about a year and a half from now, these execution of these will mean fabulous order books for the mid and small cap suppliers of EPC contractors, cement, steel, building materials, the whole pack. So I would say that's a better thing to do today, is to buy those, because consumption is the flavor of the month. Everybody's eyes are focused, but this is a second order effect, and better you bet on that with a slightly medium term outlook. And along with the infra capital goods pack, I would recommend to look at the public sector bank pack, because financing for this entire capex cycle to the mid and small cap companies and the MSMEs is going to come from the PSU banks, who have greater comfort, knowledge, and past history in dealing with these companies. So I would say that the PSU banks would also benefit from that. So my recommendation is to actually, take a staggered call on the overall infra cap goods space plus PSU banks today.
Okay, infra good and PSU banks. But Sunil sir, what does it mean for the sin stocks? See, they've also said that 40% of tax could be imposed on tobacco stocks, tobacco companies itself. So what does it mean for stocks like ITC, Godfrey Phillips, or VST Industries for that matter?
Ever since I've been tracking the markets, sin has always been punished, but the sinner has never reacted to the punishment. He's only kept on sinning, if you want to call it. So I think that any correction which happens because of these kind of a news is actually a good buy, because these sin products are there for a reason, that people like to do these things, right? They may not be good for their health, they may not be good from a social moral perspective, but there is a human tendency to do it. So I think that this kind of a market reaction to this news is actually a good opportunity to buy, because ultimately let's recognize the fact that I know it's a controversial statement, but sinning is a part of life. There will be people who will do 0% sin to 80% sin, right? So there will be that band, and to think that a cost increase is going to make a big difference to their consumption is, I think, wrong. It's like gambling, right? Just because gamblers keep losing, they keep gambling even more. So your cost increase means that much more out of his pocket goes towards cigarettes or whatever you want to do with it. So to me, right, that's a very resilient industry, if I may say, right? Because those people are bucks. They are like smokers, not going to give up just. Yes, the overall percentage of smokers will be coming down and all of that. But those who are already inveterate smokers are going to continue to buy their cigarette pack even if it's costlier. So I would say that that ability of these companies to pass on increased costs or tariffs to the consumer is probably high. It's like they say, the elasticity, right? That's very low. They can keep on passing on this cost and there will be no change in the demand. So I would say that arguably, as a contra bet, you actually go and invest in these sin stocks to the extent that the news is leading to a correction.
Okay. So you see, quite positive on even the sin stocks for that matter then, apart from PSU banks and infra-related plays that you have mentioned earlier. But apart from that, anything else that you're liking in the markets right now?
No, see, I think that this explains it. Like I said, for me, IT and the sin stocks are the contra plays. I think that consumption has seen a good rally last week, so I don't expect too much further growth. It's more of stable. For me, private sector banks, right, are the ones also who are probably going to benefit from this Diwali festival boom, because EMI-based financing, private sector banks and NBFCs are the ones who have got a significant market share there. Their deposit growth has been good for the private sector banks over the last quarter, because people have taken this 1 lakh crore of tax giveaways and put that into savings, right? So I think that they are flush with funds, I think, from a credit deposit ratio, and they are geared up to lend, and they will pass on a bit more of the interest rate cut. You're thinking about 77, 78 bips of the 100 basis points is what RBI governor mentioned has been passed on, but I think the balance will go through. So I think there'll be a huge bump up. So along with the consumption, it's the private sector banks which are going to see a huge growth in their loan book in this festive season. Of course, the impact on margins may be there, but that's okay because the volumes will make up for the drop in margin. So on absolute EPS, it's a net interest margin into the loan book, right? So I think that will still show a good growth. So from a shorter term bet, for me, the private sector banks and the larger NBFCs in the lending space are a good bet also. I like those also.
Okay, all right. All right, with that, we have to let you go, Sunil sir, but thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets. We have been holding well in the green. Sensex up about 200 points. Nifty also above that 24,950 mark itself. Majority of the sectoral indices earlier in the trade that has been exhibiting in the positive territory has slipped into the negative. If you look at the Nifty FMCG, down flat in the red at this point of time. Nifty Media Index has extended its fall to about 1% itself. But however, Nifty IT Index shining in today's trade with about 2% gains. On the other hand, Nifty Metal Index also doing well with about 0.8% gain itself. If you look at the broader end of the markets, mid cap and small cap indices, both of them holding well. Mid caps up about 0.4%, small cap about 0.4% itself. However, India Wix, that shows some kind of a pickup of volatility, up about 3% at this point of time. But yes, IT stocks, they continue to be the flavor of today, and we'll watch out if they can sustain these gains towards the end of the trading session itself. But yes, if the financial freedom is your goal, Super Pro is your superpower. Get all the live trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts, all on WhatsApp, all in one. And right now, with our special financial freedom offer, get the entire annual plan for just 2,500 rupees, down from 7,500. Download the Money Control app and subscribe today itself. All right. So yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market has developed and what the stocks have been in focus. Until then, signing off.